Hi, Mark Oswald, your host for another segment of Londonderry, Heart, Home, and Soul. Today we're going to talk about the closing process for your home purchase. And with me is Greg Korn, who is Senior Vice President of Risk for Merrimack Mortgage. Welcome.
Thank you.
And Attorney John Bisson with Barrister's Title in Manchester.
Thank you, Mark.
Thank you, John. So let's start at the top, I think, with just what's involved with a closing. You've gone through the purchase and sale, and now you're about to actually transfer the title and own a new home.
Sure, Mark. It's really exciting for most consumers, whether it's their purchase of their first home or their purchase of their subsequent homes. The government, after the financial crisis, has changed the rules that all lenders are required to follow, making it a level playing field. And some of the things that are required for a consumer when they go to close on their home are a little different now than they have been in the past. So the first thing is that prior to closing, 3 days before they actually get their new home transferred to them, they have to receive what's called a closing disclosure that'll contain actual figures that they'll pay at closing. And that's pretty exciting because by law, all consumers will receive the exact amount that they owe at least 3 days prior to closing, which is really consumer friendly, and it really sets the stage for a smoother process when you get to the closing process, when you get to the closing table, that is. You're looking at going to the closing fully aware of what you need to bring. You'll have to bring a certified check to the closing table. You'll have to bring identification to prove who you are. And then at that point, it'll just be a matter of working with the closing agent to go through the required disclosures and paperwork to sign. And hopefully, in less than an hour, you'll have the keys to your new home.
So with this closing statement, what are some of the typical figures or items that are covered in that?
It'll be basically a reflection of the loan estimate that you receive up front when you apply for financing. And it'll verify that the information that you were told up front has remained the same throughout the process. Any changes will be explained to the consumer. It'll verify what you're borrowing, the interest rate that you'll be borrowing the money at, and the terms for the repayment of the loan, as well as what can happen to your loan after closing. Is it able to be sold? Will the servicing be sold? Where will you make your payments? What will your escrows be for taxes, insurance, etc.?
And a lot of times people are concerned about pro rata or proration of fees and expenses.
Yeah, that's true, and that can be confusing to a lot of consumers. Many realtors will build into the purchase and sale contract prorations to cover the cost of fuel left in a tank, and a final walkthrough may be done after you receive that final closing disclosure 3 days before closing. Adjustments such as fuel prorations are perfectly fine to be made even on the day of closing. So just a consumer should talk to their realtor, talk to their loan officer involved if there are fuel prorations in the purchase and sale contract, to see if they can make an agreement to have those done 2-3 days before closing to prevent any last minute changes.
Condo fees, property taxes would also be included in that.
That is correct. The closing agents are familiar with the municipalities in which the property is going to be closed. So they should do a really good job of getting those property taxes and those condo fees verified ahead of time. The one thing that nobody can solve is the day that the town releases the tax bills. And that could change it from being held in reserve or escrow to being paid at the closing to the town. But the closing agent should take care of that for the borrower. The borrower shouldn't affect the amount they need to bring. It'll just affect who it's going to be paid to at the closing.
Let's talk, John, a little bit about title insurance.
Sure.
There's different forms, and why do I need that as a home buyer?
Well, title insurance, like any other insurance, is to deal with risk. And when you purchase a home, you're not purchasing a car, you're not purchasing a tangible thing, you're purchasing a right to own real estate, to own a piece of the dirt. And the way that that has historically been transferred in New Hampshire and in every state in the country is by deed. And we talk about title passing by deed. So what title insurance does is, because there's this risk of when title transfers, are you really getting an accurate, clear, unencumbered title? Title insurance alleviates that risk. What it does is the closing agent has already performed the title and analyzed the records that bring you to that closing, to that day, and is able to ensure that what you think you're buying, you're actually buying. And it addresses risk of things that might have been missed in the title, such as an undischarged mortgage or a missing heir or things like that that could impact your ability to own what's called a clear and unencumbered title.
Tax liens occasionally will come up.
Tax liens, condo liens, mechanics liens, those are all things where a prior owner may have owed money to somebody, and they've recorded what's called a lien against the property, like a mortgage. And the title insurance actually deals with the situation where those types of encumbrances haven't been paid off. And it guarantees or ensures that the title is clear moving forward. So it addresses those.
So the reassurance to a home buyer is that they're working with a quality lender and a closing agent that's going to oversee all this.
Right. The closing, the role of the closing process, the closing agent in the closing process, I like to compare it to sort of the last mile of a marathon, or to use a more topical analogy, the week before the New Hampshire primary. Everybody is sort of trying to come together to make this transaction happen. The realtor's been involved, the lender's been involved. What the title agent does, what the closing agent does, is make sure that all of the documents are in place, that legal title is where it's supposed to be, and that when you close, when you go through that hour-long ceremony of signing all those papers, that you're actually getting title to the home.
What trips up a closing? What do either one of you gentlemen see, I wouldn't say routinely, but on occasion, that may be cause to delay a closing? Is it typically on the seller side of the transaction?
It's quite a few things that could trip up a closing. A lot of it has to do with actions of either the consumer themselves, the borrower themselves. Most originators will talk to the realtor and the closing agent will all talk to the borrower throughout the process and say, hey, don't borrow any other monies during the process. Well, I can't tell you how often it occurs that within a couple of days before closing, the borrower will go out and buy a new car, or will buy $15,000 worth of furniture to furnish their new home. Well, that affects their potential ability to repay the mortgage, and that one transaction or that additional debt that they're taking on could prevent them from even closing or getting the mortgage in the first place. So I would say be open and honest, and if you're unsure, ask your realtor, ask your loan officer, ask your closing agent prior to borrowing any additional debt prior to closing.
And sometimes it rarely happens, but it does sometimes happen where some lawsuit is filed just on the verge of a closing against the seller, and there's a new encumbrance or lien against the property that pops up at the last minute. The role of the closing agent is to prevent those things from interfering with the title and the transfer of the property, but they do happen. And at the last minute, you find that there's another payoff that needs to be addressed as part of the closing that comes as a surprise to everybody.
Sure. Hey, Mark, one thing just back on title insurance, I think it's important for the potential homeowners to understand is there's two types of title insurance that both do exactly what John referred to. The first is lender's title insurance, and that's basically insurance that the borrower is paying for to protect the lender from those risks that John referred to. The second is an optional policy that is recommended for most homeowners called an owner's coverage policy, which protects the owners themselves. So there could be some confusion out there as to why one is optional and one isn't, but most closing agents, loan officers, and realtors will suggest to a new homeowner that they obtain the optional owner's coverage in addition to the lender's.
And the thing about that is that the lender is going to require the lender's coverage. So when a new homeowner is coming to borrow money to buy a home, the lender is going to require that there be coverage for that loan amount so that there's no risk to them. So what I like to say to prospective homeowners is, look, your lender is requiring it as part of the loan to protect them. So it obviously provides a significant benefit. The difference between the lender's coverage and the owner's coverage is that, exactly as the name implies, one protects the owner, one protects the lender.
Right.
So the owner's coverage is optional because it's up to the owner to decide if they want to cover that risk or not. Usually as a cost of sort of doing business or a cost of the transaction, it's not a very significant amount of money. And unlike most insurance, it's paid for once. It's paid
Right.
for at the time of closing and never again, and it insures you for as long as you own your home. So it really, when you balance it out, the risk versus the benefit versus the cost, it usually makes a lot of sense to do it all at once.
In other words, peace of mind is priceless.
That's what they say.
Or
and
something
it's
like
true.
that,
And,
right?
and in the title business, we've actually seen situations where the title insurance makes a difference. So
Sure.
it does provide a real benefit to people.
Terrific. Thank you both.
You're welcome.
Thank you.
I'm sure we'll have you back.
Appreciate it, Mark.
Thank you.
And thank you for watching. Remember, as always, be of good heart.